Good morning, everyone. I want to thank you for joining us today for our risk management webinar. And joining me is Ty Zeller from our staff here at UHV SBDC, and he will be our presenter for today. And today we are going to help you with identifying those common risks associated with a small business and how to manage those risks. And I know people don't like to jinx themselves. They don't like to think about risks, but they are prevalent all around us. And so we want to help you manage it. Now, before we get started, and as people are joining us, I'm going to run through some tips to make this session run smoothly and help you get the most out of our time here today. I am Jean Smith. I am the training coordinator here at University of Houston-Victoria Small Business Development Center. We are recording today's webinar, and you will receive a link to the recording so you can watch this webinar again. But now, so that your view does not lag, we do have mics muted and your webcams are turned off. A little bit about the University of Houston-Victoria SBDC. We are a business advising and training center, and we serve 11 counties in South Texas. We are hosted by the University of Houston-Victoria. We are part of the Texas Southwest Small Business Development Center Network and a resource partner with the Small Business Administration. We are funded in part through a cooperative agreement with the Small Business Administration as well as the state of Texas. That funding enables us to provide our services at no cost to our small business clients. So whether you're pre-startup, startup, expanding, or you're ready to transition out of your business, we suggest you take advantage of this resource. As you can see here, these are the other centers that are located within our network. We do stretch from El Paso to Brownsville all the way up through Austin. So there is somebody there to help you with your small business needs. If you are not within our network, go to www.americassbdc.org and you can readily find the closest SBDC to you. These are just some of the services that we provide to our small business clients. It certainly is more than what you see on the list here, but please note, all of our services are no cost, they're confidential, and they are one-on-one. And all this is client-driven. We work with you on the things that you feel that you need to work on. In addition, we provide a variety of training, just like today's, at no cost and low cost. Some of those are in person and some are webinars. In addition, because you are working with a UHV SBDC advisor, you have access to the specialty resource centers within our network. That gives you a leg up on the competition when it comes to finding market research, industry data, information on expanding into international trade, human resources. So how we can help a client is endless. I will note our advisors do not provide tax advice or legal advice, and we are there for the life of your business. Let me tell you a little bit about our platform. This is GoToWebinar. This is the control panel. When we started, this came up into view. If you want and you'd like that control panel to stay up in the upper right of your screen, go under view and unselect the auto hide. In addition, there's that red circle around your mic. You are muted and in listen only mode. Above where you see Ty and my's webcam, you see this gray bar. On it is a camera icon and the word screenshot. When you see something on that screen that you like, go ahead, you click screenshot and it will save that to your desktop. And that's a handy thing to supplement your note taking. If you are having trouble, you can log out and come back in. If it continues to be a problem, go ahead and give a call to GoToWebinar customer support. We do have handouts, and you can drop and drag those from the handout box in your control panel. In addition, this question area, that's where we want you to put in your questions for Ty. as we go through his presentation. So, this is a nice way. If you're shy, go ahead, put that question in, and we'll get you an answer. Let me introduce you to Ty Zeller. Ty is one of the business advisors here at UHV Small Business Development Center. He joined us in August of 2020, and he is a Certified Business Advisor 3. Ty covers Jackson, Calhoun, Aransas, and also Victoria counties. In addition, our advisors work closely with one another, so you may be in one of the other counties that we service, and Ty will be assisting if his expertise is needed. He has practiced law for over 25 years in the Victoria area, and he has experience in the areas of government, banking, real estate, nonprofits, and small business. In addition, he has served as the Port Lavaca City Attorney, as well as the Port Lavaca Municipal Judge. He holds a bachelor's and a master's degree from UHV, and he is also a graduate of the South Texas College of Law. And with that, give me a virtual moment, and I'll make Ty our presenter. Okay, and Ty, your presentation should come up.
Do I push the button that says show my screen?
Yes. Okay, you're on PowerPoint, so go to from the beginning. There we go. You are all ready to go.
Okay, Jean, I appreciate that. Thanks for the introduction. I just want to reiterate that even though I am a lawyer, I'm not your lawyer. We don't give legal advice, we don't give tax advice, but hopefully I would give you enough information so that you would be able to know the questions to ask when you did talk to your legal advisor. We're going to be talking about risk and risk management. Now, 2 weeks ago, we had a webinar on insurance, business insurance. And business insurance is a way to lay off the risk through contracts and the like. And we will, it's a little bit different. Today, we're going to be talking about identifying the risk and how to avoid those risks. The business insurance webinar had to do with when you run into risk, how do you lay those off and how do you get other parties to be responsible for that? So really, we probably should have done this webinar first, but these slides are from the Small Business Administration of the federal government, so they're generic across all 50 states. I'll try to identify where some of the subjects are Texas specific, but these are SBA slides, and there are some very, very important points to be made in these slides. So here we go. Oh, let's see, here we go. Jean, for some reason, it's not advancing.
Try using your arrow keys.
Yeah, it's not working.
Okay. What you might want to do then is just stop the slideshow and then start it again. Yeah.
Okay. So are you seeing the first screen?
Yes.
Okay. All right. There you go. So in your participants manual, we went through, it has the kind of the agenda, it has the ground rules, the introductions. Jean went through the introductions. She introduced the center, she introduced me. If you have questions, write them in the chat and we'll address those at the end. We're going to try and go through this information seamlessly to help you out. We want to, like I said, this program is about identifying common risk and how to avoid those risks. All right, so what do you know? Now on page 5 of your participants guide, there's like a pretest, and it goes through several questions that you may or may not know, but it's kind of interesting to go through it before our presentation and then after our presentation to see what it is that you have learned. These 5 questions go through the main points that we're going to cover. Um, so, identifying areas of risk. Risk management applies to many aspects of business. You might say, just being in business is a risk. I mean, the big risk is a financial risk. You could lose a lot of money, you could lose a lot of time. Most people that go into business are out of business in a very short period of time. So that's a big risk. Now that financial risk we address in our in other webinars. Our spreading out risk on our insurance webinar. That's another webinar. We're going to be talking about identifying risk. Generally, you can control internal risk once you identify them. There's internal risk and there's external risk. Internal risks are the easiest ones to control. The external risk not so much. However, external risks may be out of your control. Not all risks come from negative sources. Risks may come from positive sources or opportunities. Expansion and growth are opportunities, but they also bring additional risk. The ultimate goal is to minimize the effects of risk on your business.
Hey, Ty, we're back to showing your native PowerPoint. So
Okay.
if you just click on, from the current slide, the second icon in. There we go. Perfect.
Okay. What positive risks or opportunities can you think may be risk? Positive situations. Some examples would be sharply increased sales or orders, such as if a competitor goes out of business and all of a sudden you're getting all of that business. Changes in laws or anything that boosts your business overnight is a risk. Because if you can't handle that, that is a big black mark on your reputation and your ability to serve your customers. And you will want to avoid that. Just like you want to avoid any customer service black marks, because you don't want to give your customers any reason to look for other sources for what you offer. You don't want to give them a reason to look at your competitors. So that could be an increase in business, could be a risk. So internal risk. The human component of your business is a source of risk. Think about these possible human risks to your business. For example, illnesses and death. A business owner or employee may be ill for a day or unable to work for months. The death of a person involved in a business poses a risk to continued operations. Specifically, and really the big one is if it's a small business and you are in the HVAC business and you only have one other tech and that tech is ill, maybe has an extended illness, that is going to put your business in a bind. And you may end up losing customers permanently because of the inability to service your folks. Equipment and let's see, theft and fraud. Most businesses want to have an honest working environment, yet theft by employees and employee fraud are major risks businesses face. Time card fraud is a risk. Diverting funds to fictitious accounts are accounting risks. Low employee morale, unhappy employees can cost money through negligence or through willful acts. For example, an employee who forgets to reorder inventory is a risk to sales because back orders lead to cancellations and unhappy clients. When I was practicing law, I had a client one time that called me and wanted me to come over and look at a big problem that she had. And I went over there and she laid out 3 cash receipts. And she said this was a big problem. And I looked at them and I said, well, one of the problems is they're not sequentially numbered. In other words, they don't have unique numbers on them. And she said, well, that's really not the issue. The issue is we don't have cash receipts. And it ended up being that she had a person taking payments in her office that went out and bought a receipt book and was taking cash from customers, writing a receipt out and giving it to the customer. The business owner didn't find out that for several months and had lost tens of thousands of dollars in that time. And the way she found out was that customers were coming in and saying that their bill was wrong, that they had made other payments. And finally, one of them came in with one of these cash receipts, and then that's when the truth came out. That's another risk. And you may hire good people, but people are people. If they have problems at home, if they have problems paying their bills, if their kids are ill, if they have trouble paying their rent or buying food, all that cash going through their hands every day, it is, it's something that people look at. So that's something you want to avoid. We're going to be talking about that for sure. Low morale is a problem. Low morale causes mistakes. Low morale causes problems with employees and with customers as well. Equipment and information technology. Older equipment may run slower or require more maintenance than newer equipment. New equipment may require adjustments to work with older equipment. Worn parts may cause damage or cause company vehicles to break down. What would a non-working delivery van cost a business for one day? If you were in the delivery business and your one van was down, say for 3 days in the shop, and you had not made arrangements for a backup, what kind of problem? Well, you'd be out of business. You would be out of business for that time. You would be permanently out that profit, and you may make some customers unhappy. So downtime from physical damage or outdated systems may slow business profits. Most businesses rely on a computer system to process credit cards. Those systems are a risk to continued business when they're not working. Big box stores like Target, they run the risk of their computer systems that take credit cards crashing or going down. At any particular time, those big box stores have thousands and thousands of dollars of sales waiting in line to be checked out. If their system crashes, they can't accept credit cards, they all have a backup procedures that they do. They start pulling out paper and clipboards and pens and start taking down credit card numbers, and they start writing down item numbers and quantities. They have a system. They've thought about that because they've run into it. As part of their risk management system, they have those procedures in place in case that happens, and it does happen. So if no backup plan exists, there's a problem. Lack of administrative controls may lead to downtime in addition to fraud and theft. Other internal risks. Another source of risk might be the physical plan of your business. Phone lines, other utilities are risks to a business. The appearance of a building such as walls, windows, and doors may require maintenance to continue drawing customers. Injuries and damage may be caused by your business, or your business may receive damage. For example, a storm may cause damage to a business, or a business may cause damage by selling a faulty product. Either way, injuries and damages come with a cost. Cash flow is the lifeline of a business. When an unexpected costs affect the ability of the business to meet monthly expenses, or when credit lines are lost, a business may fail. A plan to maintain cash flow is critical. We recommend here at the Small Business Development Center that you have an available credit line with a bank for $10,000, $50,000, $100,000 that you don't necessarily use on a day-to-day basis, but that you can tap in the event something happens. Back in 2008, a number of businesses were surprised when their banks came in overnight and cut their credit lines. It would be nice to have an extra line of credit that, even though it was cut, you could reach out and tap that. So that would be a risk management procedure or process. Internal risk. Even when financing has lost its own cost-associated risk, the risk can include, in other words, financing, going out and having to get financing. You have appraisal costs, closing costs, costs for points. Any kind of loan that you get, you're normally going to pay a fee or cost. Even with an SBA loan, there are fees associated. Deposits placed on hold as collateral. You may have to prepay taxes and insurance. So think about that. Even if you could go out and get a loan, there are increased costs and risks. So external risk. Another internal risk would be things like mistakes. I mean, that's hits to the bottom line. What if you or one of your employees makes a mistake? That's a problem. Not only do you want your client, your customer, to be made whole, but you don't want to get sued, right? All right, external risk. Competition can be tough, and market changes can make life for your business tougher if you're not prepared. Consider these risks. Market changes. Employees may leave. Rent may increase. I mean, all these things are external risks that are outside your control. You may not be able to control them, but you can be prepared for them. Market changes may cause businesses to change. Competitors advertise sales, wholesale costs go up and down, and oil and gas prices affect your costs and those of your vendor. Employees may leave to go to a competitor shop, taking loyal customers with them. Rent increases may be caused by an increased demand for space. For example, you may be able to lease space more cheaply in a building or an area under construction, but when the lease is up for renewal, that rent's going to go up. Also, keep in mind that your vendors, the businesses that supply you, have those same risks. If your vendor's not prepared for those risks and your vendor's out of business, even temporarily, you may be out of business out of no fault of your own, but the fact that your vendor is not prepared. Another external risk. Your environment is more than the space you rent or buy. What happens around your business affects it. Here are some examples of environmental changes. Well, the big environmental change is federal, state, county, and city laws and ordinances can change. Weather or natural disaster can shut down your business for a short period of time or close it. Keep in mind our freeze that we had 2 years ago now shut down a lot of businesses. A lot of businesses not only were out of business for a period of time, but they had damage, water damage from burst pipes and things like that. Frozen merchandise. In our business insurance webinar, we covered how you can lay off or spread out your risk by buying insurance, which would cover some of that it's never going to cover all of it. So it's best to think about those things that could come up and be prepared for it. Structural changes in the community may be the result of progress, or may be due to empty stores and offices in a declining market. A median down the main road in your city may change traffic flow to the extent that it affects your business. We've seen that here in Victoria, no doubt. Your community may change as the needs, age groups, spending habits, or incomes of the populations change. There are a lot of franchises that you can buy, such as Subway, that are very successful. You very rarely see a Subway go out of business. One of the main reasons they go out of business, when they do, is that the community around them changes. A major, like a local school that closes down and moves out of the area. Neighborhoods, new neighborhoods that are built farther away from that particular store. So that would be an external environmental risk. Some ideas. In other words, if let's just say you own a steakhouse and a tainted meat scare in your area changes demand, what do you do to manage this risk or control its effects? Many years ago, there was the Tylenol scare. Back prior to the tamper-proof tops on aspirin, there were some incidents. People were going into stores, opening them up and putting some dangerous substances in there, which of course scared everybody across the country. Nobody wanted to go buy that product. So folks that depended on that product, it was a problem. Now changes were made to have the tamper-proof packaging that we see today. So that's not as big of a deal. If you had a tainted meat scare in your area, what could you do to mitigate that? Well, some of the things that you could do would be to band together with other restaurants and join in an advertising campaign on the safety of your beef, or launch a campaign of your own, and make sure you have a cushion in your budget. Contact the Chamber of Commerce, contact the Economic Development Corporation, those entities that have a vested interest in making sure that businesses continue. Do a media presentation with the local TV station, with the chamber, with the EDC, talking about that the meat really is safe. Another way to mitigate that risk. Personal conflicts are external risks for both business owners and employees. Families and homes do not cease to exist at the start of the business day. Children get ill. You have medical emergencies, or worse may happen. Maintenance and other repairs will be required at home. I mean, when somebody has a burst water heater that water's going everywhere at their house, they're not going to be able to come to work, at least for the time being. They've got a problem. If they have a sick child, they have to deal with that sick child. I mean, those kind of things are going to happen. So you, as a business owner, need to think through those things and have a plan. We're going to be talking about that and how to do that. For a small business owner, involvement in the community is another way you can avoid risk. But for a small business owner, it takes time. It takes money to be involved in a business, in the community. One of the ways that some of my clients have gotten traction in the community and involvement is real easy. Is spending a couple of $300 and sponsoring a Little League team. Those Little League players, they will wear that t-shirt with the company name on it for years. The parents will remember, and the kids will remember that business. I still remember the businesses that sponsored my Little League teams many, many years ago. And for $200 to $300, you get a lot of traction out of that. So be careful how you get involved in business. You could overdo it, but that is a risk. Employees may be involved in activities outside your work that are not generally considered a business risk, but consider how you would handle the situation. That your most reliable manager wants to attend an out-of-town playoff game with their child on the busiest day of the month. Those things happen. Even complacency is a risk. Complacency comes from being comfortable. Your business may be successful and has been for a while. You may be comfortable with the hours you're working, but you may miss opportunities for growth because you do not want to expend the extra effort. Now, multiply the effect of complacency, because complacency also happens to employees. Discussion point 4. What is required for your business to continue operations? That's a good thought process to go through. One of the things that we advise our clients to do is to write a business plan. Now, of course, if you're wanting to borrow money or you're applying for a grant, you have to have a business plan. But a business plan is extremely important, even if you're not going to borrow money, because it helps you to walk through, at least mentally, all of those various areas of your business. And one of those parts of your business plan has to do with risk management. One of the most important investments you can make in your business is creating a business plan, especially when identifying risk. Creating a business plan will help you assess areas of risk that could potentially impact your growth and the ability to continue business. The continuation of your business in the event of any risk should be noted in your plan. Look at anything that could halt, slow, or affect the profit of your business. List those risks, rank them in importance, and look at potential costs. Identifying and assessing risk is something that will require time and should be revised periodically. Be sure to schedule time in your calendar to identify areas of risk. Get help from the outside, from outside sources. Sit down with your SBDC advisor and brainstorm about various risks that you may not even be thinking of. Many of these sources are business specific. A business plan isn't something to create and set aside, simply to be used later to obtain financing. Once completed, the business plan will become your guide, just like a map. Excessive debt in relation to the owner's equity is a major warning sign. Use the following formula to calculate a company's debt to equity ratio. First, determine the total liabilities by adding up all your short-term and all your long-term debt. Then divide that by total owner's equity. And that number will give you a ratio. And you generally want to have a debt to equity ratio about 40 to 50%. So you want to be having equity in the business of roughly twice of what your debt is. Now, these ratios are industry specific, but generally, if you have over that amount of debt, then you really want to be looking at that. You can check similar types of businesses through a business reporting service or consult your accountant to obtain the normal range for your industry. Reliance on small numbers of customers is another big warning sign. If you have one or two customers that constitute the bulk of your business, that's a warning sign because the loss of that customer, for whatever reason, they go to a competitor or they have encountered a big risk that they can't deal with and they're out of business all of a sudden. Your business is dramatically impacted. So that's a warning sign. Now you can work with that and you can work around that, but watch out if you see that. Reliance on one product. If you sell one product, that may be an issue and a warning sign. When your business relies on one or a small number of vendors, your business continuity plan is only as solid as your vendor's business. So you're not in control. So if you're not in control of that external threat, have a alternative plan at least. Cash flow. A very basic calculation of your cash flow starts with your business cash balance at the beginning of each month. Cash receipts from all sources are added to this beginning balance, and then all cash payments are subtracted at the first of the month. So you go through this calculation. You take your amount in your bank account, you add anything that you know is coming in, you subtract anything that you know is going out or that could possibly go out. Oftentimes, some things are not thought of. Let's say you had a salesman leave your business and you wrote him his final check of $10,000, sent it to him in the mail. That's something you have to remember, because as long as that check is not cashed, that's something that possibly could hit your checking account at any time. So at the beginning of each month, you need to factor that in to make sure that you're not going to have cash flow problems during the month. If you're having a hard time covering checks, your business has a cash flow problem. Irregularities in accounting, bank, or time card records is an issue. Like I was talking about before, the problem with the cash receipts, and oh, we don't have cash receipts, that's an issue. You need to have audit procedures. Your employees need to know that you have audit procedures. More important than auditing your records is that your employees see and know that you're auditing the records. And you can find things. There's no doubt about that. Do project or job sheets which match or have been submitted for payroll. Do timesheets that match or have been submitted for payroll. Does the payroll ledger reconcile with bank account statements? Are there outstanding checks to former employees? Are former employees still in the accounting system? Irregularities in computer system administrative reports. That's another one. That's a sign. When reports from your computer system are generated, verify user access and system changes by considering these questions. Has any user access been changed since the last review? Is access for all users ordinary for their job functions? Do users who are no longer employed still have access to the system? Have changes been documented and approved? Are transactions or changes out of the ordinary? It comes up often. Well, not real often, but often enough to mention that an owner that doesn't keep close track of a particular employee that handles all the accounts payables, every once in a while it'll come up and an owner ask, well, who is this vendor that we've been paying every month? And it comes up that vendor really doesn't exist. That PO box that check goes to every month actually belongs to an employee. It happens, and sometimes it's years before that's discovered. Sometimes it is well worth the money to get an outside CPA to audit your books, to check out things like that, to actually run down those vendors, each vendor, to find out, is that a legitimate vendor? What is it that they supply? If it's a product, what is that product? What does it look like? Is it actually something we use in our business? And where is it? Where do we keep it? Doing a cross check of, if we get 100 widgets a month, how many do we sell? Do we sell an average of 100 a month? Or is it 50 a month that we actually sell and 50 that are going out the back door that we haven't thought about before? So it's those kind of things that are important to think about and to check, and that your employees know that you're checking. Employee turnover is a big red flag. Consider these questions when thinking about employee turnover. If you have a high rate of employee turnover, is the result because of hiring practices, lack of training, or is it the work environment? We do what's called a SWOT analysis, and identifying risks for business continuity. Well, risk continuity first, the business continuity. In your business plan, you're going to have a section and a paragraph on business continuity. What this means is, how is your business going to continue? If you die, if you retire, if you have a death in your family and you're not involved in the business anymore, what's going to happen? Are you going to put your business up for sale? Is there someone in your family, a business associate that has the authority to put up the business for sale? Are there employees that might step in and buy the business? There are a lot of different questions to be considered with business continuity. Also evaluate risks with regard to potential expansion or future growth. On a day-to-day basis, consult with your operations managers and see, and they may be more alert to possible risk. So a brainstorming session with your main folks is always a good thing to do. In fact, consult with all your key people to enlist their input and communicate with them about the risks that you see. And to do that, we do what's called a SWOT analysis, preferably on paper. Write it out, your strengths, weaknesses, opportunities, and threats. But at the very least, go through the mental process of this. Performing this kind of analysis on your internal strengths and weaknesses and your business's external opportunities and threats will uncover overlooked risks. To be effective, strengths, weaknesses, opportunities, and threats analysis should be a very candid and honest assessment of the business. Remember, some risks can also be opportunities, such as, remember COVID shut everybody down? I mean, there were a lot of businesses scrambling, but there were a number of businesses that made the best of it and ended up expanding business, increasing their sales because they stepped into the void that was left by other businesses. Some of our clients, they normally worked in the oil field. Maybe they had a number of welders that they employed. They couldn't go out in the field for a number of days. They put their employees to work in the shop, making barbecue pits, cattle guards, fencing, all kinds of things that they later could sell. So they didn't lose the downtime. In fact, they increased their sales because of that. So an opportunity may present itself even in your SWOT analysis. Seek outside help when assessing your business risks. The SBA can provide many helpful resources, which the Small Business Development Center here is one that you could use. Even if you just wanted to come in and sit down and do some brainstorming with one of our advisors. If funds permit, consider an auditing firm or certified public accountant. Talk with your bank or commercial lender about risk for your type of business. You may want to consult with your insurance provider. Insurance providers are great to sit down and talk with. You can check with the internet to find similar businesses or professional organizations. Just about any business that you may be involved in has a professional organization that you could be a member of. Even if it's just the independent business organization that we have, that all businesses can belong to. They provide a lot of resources for just this kind of thing. Once risks are identified and evaluated for their potential consequences, they should be measured by how they affect earnings, cash flow, and business operations. A good example is Water damage. A business that flooded may be cleaned up, reopened, and continue operations, but the expenses for cleanup put a strain on the budget for months to come. Lost income is not the only thing to consider. For example, customers may move to businesses that did not flood and not return to your business. The customer migration may require new advertising, new products to renew interest. Loss of future profits due to customer migration, for example, may be more costly than the direct cost of income. There's some statistics that say that it's 4 times more costly to acquire a new customer than it is to retain an old customer. So don't be afraid to spend a little money to retain your old customer, because you're going to spend 4 times as much if you lose that old customer and have to go out and get a new customer. Minimizing and controlling the effects of risk can improve and maintain business cash flow. The continuation of cash flow creates stability for the organization and helps credit relationships remain intact. What does this all mean? It means your business will continue. Continuity. The longevity of a company will mean greater stability. Creditors will see this stability and good cash flow reflected in the financials of the company. The rewards of risk management all linked together. Good cash flow leads to stability, which leads to good credit, which leads to longevity. A written business plan should not only include a list of possible risks, but also include controls and plans to manage risk. Remember, keep your business plan current and keep going back to it and readdressing changes in costs by assessing new risks. Equipment. Equipment that needs to be repaired may interrupt your business, but insurance or service plans may minimize your costs. For example, if your business is dependent on a high-speed printer or copier, a service plan may control the risk of the copier breaking down. Parts for the copier can be expensive and take time to replace. To be prepared, copier vendors will plan for parts and service based on the copiers that they have sold to you and the number of copies that you make. Service plans for copiers usually require an annual count of copies made. Higher usage may mean more maintenance and a higher cost. But one of the benefits of doing that is it spreads out your cost of your maintenance to a set amount each month, which is helpful rather than having to write a big unexpected check. Vendors, your vendors have risks too. Some of the same risks you face. Relying on only one vendor can be risky. You may be able to avoid problems with your vendors by following these suggestions. Have more than one supplier for products. Even if you have one supplier and you use one supplier, go through the mental process of looking around and identifying another supplier just in case. Shop for vendors with the best price and service. Maintain relationships with multiple vendors by buying from them sometimes, so that when your main vendor, for whatever reason, can't supply you, you call the backup vendor. They at least know who you are. I mean, you're a customer of theirs, and so they know who you are and they're ready to help you. A multiple vendor strategy may make vendors push for more of your business, resulting in lower prices and competition. If in any event, if one vendor is unable to deliver, then you have a backup. Do not be afraid to investigate the risk your vendor may face. Some of the risk information is provided by business credit reporting agencies or by insurance companies. You may even have just a sit-down conversation with your vendor about that. Your operations manual should include a business continuity plan. We talked a little bit about that. The plan should provide for steps to take for short-term and long-term situations. For example, if your business is unable to operate in its present location, it is possible to use another one. Say a tornado or storm knocks your building down. Are you able to take another laptop and take it to another location, download all of your company's information from the cloud, and start your business from there? That's something you may need to think about. Create a set of operating procedures for completing tasks. Many businesses were started before extensive computer-based technology. Back then, these businesses operated by following manual steps. Describe those responsibilities by inputting manually captured information into your computer system when it's up and running again. Very popular and very good is storing all your information in the cloud, backing it up automatically daily. At the very least, well, a lot of our clients can put their whole business on a flash drive or a thumb drive and backing it up at least daily. Your modern computer systems can back it up automatically or back it up every hour, so that if the system goes down, all you need is a computer or a laptop, and you can download the system from the cloud, and you still got your accounts payable, your accounts receivable, you still have your inventory records, everything that you need. So backing up is very important. In your continuity plan, include the following: staff members' duties, staff members' work locations, contacts names such as emails and phone numbers, vendor, utility, and emergency phone numbers, employee notification, or a phone tree. Just as you plan for those risks and possible consequences, your vendors should plan for those as well. Ask your vendors about their business continuity plans. Keep a copy of your continuity plan in place where your managers and staff can easily access it. Several risks are connected to the information technology system. Safeguard login information such as personal usernames and passwords. It's amazing. As we go out and we go to our clients' work sites, a lot of clients are good about guarding their system with passwords and usernames, which is great, and keeps outside threats from coming in and getting in their system. But then we see that the username and password is written on the wall next to the computer. That's not helpful for internal risk. Okay, so all the firewalls, all the passwords in the world is not going to help you if you're writing it on the sticky tab that's posted on your monitor. Protect systems with firewalls to stop intrusions. Use software to scan for viruses. These protections may require additional setup time and annual renewal fees. However, it's worth it. Institute levels of access. Not every employee needs access to your complete system. Very few of your employees, maybe one or two main employees, need access to your complete system. A lot of your employees may just need access to the sales part of your system. Others may need just access to the inventory part of your system. So keep that in mind. Generate system reports. So print out a system report, seeing who's logging in to what parts of the system. Do those logins make sense? Are they logging in from home at strange hours of the evening that they shouldn't be? Are there strange logins that you don't know about? Those are things that you should be thinking about. While the competition cannot be controlled, you can at least know what they're doing. Investigate your competition, what products they're carrying, and how they're priced. Consider these questions. Are your prices higher or within the market? If you shop at Lowe's or Home Depot, you will notice, and you've noticed, that they carry different brands. So they both have brands of paint, but they carry different brands. It's interesting. Well, it's not interesting. It makes perfect sense that the two products that they carry are different brands, but they will be very close, if not to the penny, in price. And those big box stores work very hard to keep those different products competitively priced. That's some of the things that you need to be doing, watching your competitors' pricing. If you think you have an edge, maintain it. In other words, if one of your products is significantly below your competitor, you need to be leveraging that for more customers. You need to be advertising that. You need to be reaching out to maybe some of your competitors' customers. If your prices are much lower, it's time to reinvest pricing with your revisit pricing with your vendors or search for new ones if your competitors' prices are lower. Consider this about your staffing. Does your business need training in any one area? How are your competitors' employees interacting? Do your competitors' employees seem happy? Do you know what types of benefits your competitors' employees receive? If a number of your employees have children, especially children maybe at home or school age, the Texas Workforce Commission has a real good program where they kick in money to help toward providing childcare in the event that your workers need those. It's something to check into. We can help you, advise you on that sort of program here at the Small Business Development Center. Employee benefits, a lot of things. Paid time off is something that doesn't come directly out of your pocket. It's not something you write a check for, but it does mean a whole lot to your employee. A lot of little things you can do to keep your employee happy. Believe me, if somebody leaves your employee and they're mad at you, it is going to cost you money. One of my governmental entity clients that I had when I was practicing law, every time they had somebody that got fired or left and was unhappy, the first call that employee would make is to the EPA or the state environmental group, saying that the water that was going in the system was bad, or that particular entity was not meeting the standards. And anytime that kind of report's made, an army of people converges on the water plant and all kinds of tests are run, and it costs the entity a lot of money, okay? Employees know that, okay? So when they leave and they're not happy, if you have to terminate somebody, be prepared for that sort of thing. Employees, another thing on employees, it's important that you as an employer follow the rules, okay? As far as reporting to the government, reporting as far as taxes is concerned, any kind of reporting you have to do to the government. Don't cut corners, okay? Even though you may save money by cutting corners, because the first thing that a disgruntled employee is going to do is report you, and that's going to cost you big money. Okay, what's your most liquid asset, and how can you protect it? Think about that. Of course, most liquid is cash in the bank, right? So potential for fraud and theft is big for your biggest asset, liquid asset. Important to have separation of duties. The employee who accepts cash or payments, processes the work, deposits funds, and reconciles the related account may be attempted to commit theft. Just like the story I told you about the employee that was taking cash and she had her own receipt book. Something to consider. Consider setting up an audit trail with one person accepting and processing payments. One way to do that is to have a computer system and make sure every transaction goes through the computer system, and the computer prints out a receipt for every transaction, whether it's a on account, a credit transaction, a cash sale. Everything goes through the computer system. Cash payments and arriving mail should be logged and verified by two people. You know, you would think it would change, but businesses still get a lot of cash in the mail. You need to have a system whereby two people verify that. Each person should count the cash in the presence of another. This procedure sets up accountability and provides a record of the activity. Some duties may require a recorded supervisor approval. For example, the server at a restaurant may need approval from the shift manager to void a charge for an unhappy customer. Issuing credit for returned merchandise may require supervisor approval above a certain dollar amount. Conduct periodic audits of cash to ensure that its balances and all income records and bank statements. Surprise audits should be done at least quarterly. And a rut that business owners fall into is they'll do that audit every quarter, but they put it off until the last day of the quarter. They always do it on the last day of the quarter. Well, employees get wind of that, and they know that the audit is going to come on the last day of the quarter. That audit is completely useless. Okay, the audits need to be random, done at least every quarter, but needs to be random. No one can afford to lose cash if the bank fails. So FDIC, right now, the insurance that you have from the FDIC is $250,000 per depositor. You can split that up and get more if you have different accounts. You can get more if you use different banks. So keep that in mind. Talk to your CPA about that. Okay, your employees are important to the success of your business. Review these tips for managing your employees. Use pre-employment screening. Many businesses, credit reporting agencies, and human resources service providers will help you with pre-employment screenings and background checks. I highly recommend that you use a service for that. Don't try to do that on your own. There is a good likelihood you're going to violate the law by trying to do an investigation of job applicants. Provide job descriptions and lists of duties. And your job description should always include the catch-all and anything else requested by your supervisor to avoid the situation where your employee says, that's not my job. That makes my blood boil when I hear that. Communicate job expectations and any job expectation changes to your employees. Provide performance evaluations. You need to let your employees know what your expectations are and how they're meeting them or how they're not. Provide performance evaluations. Your employees should expect evaluations at least annually. Be involved. A business cannot run on its own. Owners who are not present will find that their businesses run into problems. Audit payroll. Reward safe performance. Have a dinner once a year, at least a picnic, and reward your employees for being accident injury free. No days off for injuries, something like that, that they can look forward to and they can work toward. Be involved in your business. A business reward safe performance. Yeah, I did that. How and when in your employees' work impacts your business. Review these strategies. Set work hours. Plan work with a balance. Always give your employees a good work-life balance. Allow extra time for unexpected events. Employees will be late. Anticipate that, okay? The problem is that employers run into is if you cut an employee slack for being late, you're going to have to cut other employees slack for being late, okay? So don't let that get out of control. That's why it's always good to have an employee manual. And where it's best not to have a manual if you're not going to follow your manual. I've always told my clients that it's best to have a manual, but if you're not going to follow it, it's best not even to have a manual. Train your staff or support or an assistant. A written business plan should include how to deal with the possibility of your disability or your absence. Develop a support system. Support systems are vital to businesses and families. Do you have friends or services that can help your family when you can't be available due to work. If you're primarily responsible for doing the payroll and you're not there, is there a business that you can, or a CPA that you can reach out to that's going to be familiar with your business, that can take it up? If you're in a car wreck and in the hospital on a Thursday, you need to do payroll on a Friday. Can that CPA firm get that payroll out? I mean, that's kind of important. Your employees are counting on their check. Discuss risk. Brainstorm with all your employees. Provide a safe workplace. OSHA has various requirements that help you to keep an eye on your workplace and make it safe. Also, provide workers' comp insurance for your employees. Don't rely on health insurance for them. Health insurance is not workers' comp, okay? And it's not a substitute for workers' comp. So be careful about that. Use lines of credit wisely. It would be nice to have a line of credit that's available to you that you can use at any time, sort of like a business credit card that you don't use, but that you can use in the event of something that comes up. Talk to your insurance agent. Talk about employment practices insurance. You could be, even if it's unwarranted, a claim of sexual harassment, a claim of harassment of any kind, a claim of employment practices, you requiring employee to do something that they're not capable of doing. I mean, there's all kinds of claims that can come against you that you can get insurance for. Your insurance, general insurance business policy may cover that. Ask your insurance agent about employment practices insurance. Something really actually is very cheap, very inexpensive to get. SBA on their slides suggests that you maybe want to get a backup generator. Probably doesn't apply to a lot of businesses, but if your business requires a piece of machinery, like if you're in the printing business and your printer needs to keep running, you may want to think about a backup generator that in the event of an ice storm and the power being out for 2 or 3 days. So that may be something to think about. Okay, ethical and honest behavior will begin with management. Like I said, follow the rules. Do everything that you need to do. Don't cut corners because somebody gets mad at you for whatever reason, whether it's a valid reason or not. The first thing they're going to do is report you to the government, report you to the bank, report you to the insurance company, and that's something that you want to avoid. No one starting a business expects to fail, but planning for the worst is part of managing the risk involved with any business. Sometimes it becomes necessary to implement a business exit strategy. Anytime somebody comes to the SBDC and talks about starting a business, and we go through that process with them, part of the process of going into business is to developing a strategy of how to leave the business. With whether that would be with turning the business over to a family member, allowing employees to buy it out, selling the business, allowing family members to inherit it. You at least need to have an idea in mind how you're going to exit that business if you have to, in the event of your disability or death. Is there going to be enough money available to do those things if all of a sudden you're not there? So that's just some of the things to think about. Plan and manage risk to succeed. So what we've talked about today in this slide deck, and I'm sorry for reading a lot of it. It's not my slide deck, it's the SBA's. But we've talked about a lot of very valid points. You use insurance and other contracts to lay off and spread out the risk, but these concepts we've talked about today, you can use to identify the risk and learn how to avoid them. So, do you have any questions?
No,
Question?
Ty, I am not seeing any questions. So folks, if you do have a question for Ty, go ahead and put it in the question box. A lot of people like doing that. They're kind of shy. And don't forget, this is a lot of this in risk management you address in your business plan. So it's not as onerous as it might sound. And a lot of the things you do to reduce the risk to your business, you do every day. So, but no, Ty, I am not seeing any questions.
Okay.
All right. Did you have any more slides?
Just general slides that kind of review
Okay.
points to remember. There are internal and external risks associated with a small business. You begin assessing risk by completing a list of those events and resources involved with the business. The cost to insure and minimize risk should be weighed to the potential impact involved. You can buy insurance for anything, but it may be so expensive you may not want to do that. Business continuity plan is extremely important. Strategies include communication, setting expectations, support system, training staff, insurance, assessment and contingency planning. Be honest in reviewing your business for risk and warning signs. Seek outside assistance from your insurance agent, from your lawyer, from your CPA, from the SBDC. And an exit strategy is important. And that's it.
Okay. Well, thank you so much. I've really appreciated you being our presenter today and making it so people can understand some of those common risks that are out there in business, not just one kind of business, but all businesses. Wendy has sent some comments appreciating your presentation. And thank you, Wendy. Ty and I appreciate that. This is one last opportunity if you want to get in touch with us. I've put that information up on the slide, and all you have to do is go to screenshot, click it, and you'll have access to that. I've put all our mailing address, our email, our webpage. In addition, when you leave here today, you will see in your browser our survey of 5 questions. It only takes a minute to complete. Please take that survey for us. It helps Ty and I know how we've done. In addition, you'll get an email tomorrow if in case you cannot get to the evaluation today. You'll get an email tomorrow from GoToWebinar. It'll have a link to the evaluation. It also will enable you to print out a certificate for your attendance here at our webinar today. And that is something that a lot of lenders like to see their business owners continually advancing their knowledge of small business operations. And this definitely is one of those areas. So take advantage of that. In addition, if you want to follow us on social, I've put up those links. I tend to post to our Facebook group first, and then catch up on the other social media channels. If you are following us, make sure you do subscribe to our Facebook group. You will see then our postings in your feed. As you all know, otherwise it's kind of hit and miss. And you certainly don't want to miss not only our training opportunities, but we share information that's important for small business, whether it's from an advisor, from one of our resource partners. We just try and post things that help you run your business. So please take our evaluation for us, and we will see you at the next webinar. Bye, everybody.